Hey, it's Rich, and just wanted to give you a quick market update for the month of January of 2023. I wanted to start with going over what we saw in the month of December, and one of the leading indicators is the number of new pending sales that we have. In the month of December, we actually saw that dip, and so in January, we saw one of the lowest homes closed in the last 12 months for the month of January. We started off the month of January with more inventory than we saw year over year, with roughly 1,400 or a little over 1,400 homes available in our local area. And that was the case for many of the areas that we operate in. We're currently running at a little over a 50% pending ratio, and we have seen the number of new listings onto the market pick up in the month of February. And if we actually look at what that's looking like right now, we're trending up towards the 2022 numbers. We're seeing the average sale price decline, and we're just a little bit below where we were at in 2022. And that's the same for the average price that we see for homes coming onto the market. Those prices are just below 2022 levels. Homes are taking a little longer to sell right now. You're averaging somewhere between 25 and 35 days on market, depending on your local area. And so you can expect that homes are going to take a little longer to sell. We need to have them in 10 out of 10 condition or as close as possible in order for them to be competitive, because buyers are just taking their time a little longer. It's a little more expensive to own a home right now with where rates are at. And so when we enter a when we enter a house onto the market, we want to make sure that it's priced well and positioned well with regards to condition. So the other things that we're looking at are what the Fed's doing. And the Fed in their last meeting, they raised rates, the overnight rate by 25 basis points, which is slowing from where they were at previous rate hikes. Excuse me. So previous rate hike was 50 basis points. Which could be a positive. Could be a positive because they think that inflation has peaked and or is slowing down, and so they can slow their pace of rate hikes a little bit as well. So that could be a positive with regards to affordability. Rates reacted, I should say, very well to the Fed's last meeting minutes and their comments about the economy going forward. So we've kind of leveled out on rates a little bit with regards to the 30-year mortgage rate, which is good. We expect activity in February to continue to pick up, and I wouldn't be surprised if we saw that into March. And we do anticipate that inventory is going to be a challenge, at least for the first quarter, if not into April, as we may have borrowed some buyers and sellers in the previous years that kind of expedited their plans. So we do anticipate that inventory is going to remain low. Rates hopefully stabilize and if not start to decline as we head into the summer months. And therefore we anticipate activity, the number of pendings for the homes that are currently on the market to pick up. Mortgage rates are still holding somewhere in the neighborhood of 6 to 6.5, depending on your credit score and financing, which is way better than the 7.5% that we were seeing just a couple of months ago. So as always, if you have any questions, feel free to reach out to us or your local agent. But we'd love to chat more about the market, some of the exciting things that we're doing for our clients within our companies on the build and hold investment side, spec build, and just trying to round out the number of services we have available to clients to take advantage of. So hope you guys have a great day and hope you have had a great start to your year of 2023. Thanks.